And my entire focus is on new space commercial growth, really looking at scalable and sustainable business models and how companies can actually find the right insertion point to have a pragmatic, frameworked approach to engaging the space economy. So I'm very much looking forward to this conversation.
Awesome, thank you for that. And so, as I was talking about earlier, we have failures company-wise, and we actually had some pretty big ones recently. So, how do you approach fundraising and keeping that investor kind of confidence high in an environment where the news and the press probably isn't the best? Micah, what do you think about that?
I would try to address the root of the problem. If that's what you actually want to accomplish, is to get people to invest in space. And I think the assumption within this room is we want people to invest in space somehow. Maybe it's through private investment, maybe it's government funding, but the industry does need more capital to keep moving forward. And so I think one of the major challenges that we have in the space industry on that front is honesty. And I have my own private little game that I like to play these days when I go to a conference. How long will it take before someone mentions that $1.8 trillion figure for 2035? Yesterday, at one of the pre-events, it was 80 minutes. Today it was 4 minutes before that was mentioned, even obliquely. Now, the thing about that is that 1.8 trillion, that comes from a study that McKinsey did in conjunction with the World Economic Forum. And you hear that and you think, okay, these are a major global consulting firm, and World Economic Forum, that's a big high reputation institution or body or whatever you want to call it. And so surely they did the homework, and this is something that's credible, right? Well, you have to look at the incentives. And so for McKinsey, that number needs to be as high as possible so that they can get consulting contracts telling everyone how to get their piece of that 1.8 trillion. The World Economic Forum, again, you think about, it's this big group of people, they're probably pretty impartial. It's the space group within the World Economic Forum who was a part of it. Every single person associated with that has a personal or organizational incentive for that number to be as large as it can possibly be, because their companies need investment. They need investors to believe that this is going to grow like crazy. We are going to get to 1.8 trillion in just 10 years. It's probably not going to happen. And just, I have so many things I could say about that study. I'll just give you a couple examples. $70 billion of that 1.8 trillion comes from e-commerce carried out over a satellite broadband connection. So if I just go to Amazon and I buy a widget, and I happen to do that over my Starlink connection, then the value of that widget counts as space economy. Isn't that beautiful? Now, if we think about that from a technology standpoint and we're saying, okay, this money is flowing into the industry. Yeah, it's not flowing into the space industry, folks. It's not going to help with the next generation of technology development for a launch vehicle or a satellite or anything we want to do in deep space. So it's that kind of game that gets played. And so if we want investors to believe in space, there need to be more honest brokers and honest advisors explaining, here's the reality, here's how you judge, whether a company is a good company or not.
I like that. Kelli?
I don't know if I want to respond or if I want to answer your question. I'm going to answer your question, and then I'd like to unpack that. Talking about confidence, because I think it's a really important piece of the conversation. I think part of the problem when you talk about space markets and an investment into the market is that space is still talked about very myopically and very specific. So you were talking about the media, talking about these perceived failures, but people still think of space in these esoteric, mythical, Mars, moon, rockets, which it is. But the problem is that when you talk about space and those aspects, it actually obscures the fact that we have a living, breathing marketplace with companies that are anchored, that are making money daily. So when you look at the ecosystem, the market can be risky, creative, and stable all at the same time. And so the future of space is really anchored by these established industries that are making money. I'm going to answer your question in this, are making money, but it's going to be defined by these new emerging areas that are going to redefine business models and how we engage in space, and we need to have honest conversations about both. What it comes down to is understanding different risk thresholds. So when you look at the space landscape, a lot of people fail to recognize that like commercial space alone is not a thing. The US government is still the number one anchor. And so when you are building space portfolios and when you are building strategies, you have to take the risk threshold of an investor, private capital, and the risk threshold of a government. And they have very different mission sets, they have very different requirements, they have very different ROI. And so that is really what obscures the question mark, because we talk about these failures, but we don't instill confidence because people don't actually know what they're investing in and how it's going to be allow for economies of scale and hit back into other areas. The piece I do want to say about the economy is I do agree that it tends to get blown out of proportion often. And I am an optimist for the future, but I definitely believe there needs to be some sort of pragmatic approach. I will say that for the Space Foundation, we do conservatively believe by 2027 we are going to reach $772 billion. 78% of that is commercial revenue, 22% is global government spending, but a good portion of that is the space-to-Earth market. So it is utilizing space-based data, space-based imagery, and all of that encompassing it, but it is a core component of the ecosystem. It just matters on how you count it and the taxonomy of the economy.
But anyway, what would you recommend as far as like policy or focus for Arizona to prioritize in an effort to make itself a leader in the space investing environment?
So I would say a couple of things. It's literally not an exaggeration when I say I probably spend 90% of my life talking about space economy. And no matter where you are, anywhere in the United States or the world, at the end of the day, space needs to make sense for where it's happening. So space means different things to different people. If you think about just the global ecosystem right now, there are 92 countries that have an active satellite in orbit. Some of them have a satellite in orbit because they actually want to extract data and imagery from it. Some have a satellite in orbit because they want to have their flag in space. So it just depends on what the motivation is. So beyond the enthusiasm and the excitement of space, which we all have punctuated many times over the panels, like space is really cool, but we're also an echo chamber, and we have to remember that. Like, we know the value of space intrinsically. When you leave this room and go and talk to other communities, they think about it just in terms of astronauts and satellites and rockets, and not the benefit to them that they feel. I get asked at least 3 times a week why people should care about space. And the first thing I do is I point to their cell phone and remind them that there's at least 14 different pieces of space technology in their cell phone, and an average person touches space about 25 times a day. So first, it's telling the better story about how space benefits them on a daily basis and why advancements in science and experimentation and all these startups are really going to benefit what they're going to feel, even if they're not in the industry. That's the first one. I also think, though, that Arizona does have an advantage because of the industries that exist and your large defense base. So if you just look at the growing trajectory along space, it's been mentioned a couple of times, not just the global aspect, but we are in a new space race, and particularly with China. China has made space a political priority, and we have seen in the past 3 years defense budgets across the globe at least increase by 18%. And you have a very large defense base in Arizona, and a lot of the technology that is being seeded for future space exploration always has a dual-use aspect to it. So being able to tie defense priorities to the commercial space enterprise and figure out how it can fuel both, I think, is one of them. And another one, too, is that rely on your strengths, your semiconductor industry, right? Your infrastructure that is going to be so critical to the future growth and scale is massively an advantage, and it is something that you can use to incentivize and entice companies to come here and want to become part of the ecosystem to build broader.
Yeah, and certainly agree with everything you said. I would add on, when it comes to semiconductors or the other sectors that are present in Arizona, look for those overlaps. And that has a lot of relevance for the funding side as well. So I've talked with a number of people, today and yesterday here, and just about what it is that Arizona really needs in terms of finance and investment and how all of that works together. And one of the things I've heard time and again is, we're way behind other states when it comes to venture capital. Fantastic. You can avoid the mistakes that they have made. I really do mean that. And I'll just give you a few examples of why I am somewhat anti-venture capital, with all due respect to funds that are represented in this room. It's usually not a very good fit for space, because you have development timelines that are simply longer than that 5, 7, 10 at the outside year time frame that a typical VC fund needs. And so we've seen what the outcome of that is. The flow of private capital into the space sector really took off in about 2015, right? Give or take. And since then, we've seen roughly, say, $80 billion of private investment in space companies worldwide. Now, let's drop about half of that and just say, let's look at the early years, because those companies have had enough time to go through sort of the VC life cycle from the early stage. So let's say now it's only about 30 billion, 40 billion if you're looking at those earlier investments. What do we have to show for it? We have a lot of companies that have been acquired. We can get back to whether that's a good thing for the industry or not, but that's the most common outcome for a VC-funded space startup is acquisition. And then we have a relatively small number, 10 to 15 of them, that went public. Out of all of those that went public, first, some have since gone bankrupt and completely disappeared. Others have been acquired, even as public companies. So that hallmark of stability and, we're going to be around for a long time, we're a public company now, that didn't work. They were not good businesses. And I would say there is only one out of all of those companies that is somewhat financially stable, is primarily focused on commercial customers, not government customers, and has a shot at continuing that. And that's AST Space Mobile, which is doing direct satellite to smartphone communications, and they have partnerships with basically the major telecom companies, AT&T, Verizon, other companies like that. And yet, even for them, they still have to show that it works and that there's a market for that, and they can continue to bring in revenue and get to a point of profitability. The reason that they're particularly interesting is they've made enough headway over the past year that their share price has gone up by 750%. So, if I'd known, I would have bought a lot of their stock a year ago. But it's that way with these space companies. A few deals can send them to the moon or the basement. Another example out of that cohort of companies is Virgin Galactic. The future of Virgin Galactic as a company is right here in Arizona. The stock price for Virgin, again, I spend a lot of time looking at this because I run the index for an ETF that trades on NASDAQ. Ticker is UFO. Go check it out. It's the only pure play space ETF in the world. But their stock price has gone down more than 99% from its peak. Okay? So the only cash they have available to work with is what they collected earlier. So they were very lucky in terms of timing when they went public. They were the first of this cohort to go public, so they got a lot of attention, got a lot of investment. They raked in the cash. They were even able to do subsequent offerings to bring in more cash by issuing more shares before the share price went down through the floor. But they have this pot of cash now, and it is a race. They have to deliver working, operational, profitable spacecraft before the cash runs out. And they're doing that here in Arizona. They will either succeed, which I very much hope they do, or they will fail. If they fail to do that, they're not going to get more cash. I would be astonished if they got more cash from any source. So that is how precarious it can be. And so I see that, and I see these outcomes, and I believe it is a direct result of the venture capital model, which pushes companies to expand as rapidly as possible and often unsustainably. And so the space-specific VCs may be slightly better on that front. I'm not knocking anyone in the room personally. But even when you have space VCs, and you have all the other VCs who are also investing. And they have their priorities, and they may honestly not care about the future of space. So it's just, let's push it as hard as it'll go. And if it's a big winner, that's great. We get to cash out. If it fails, whatever.
Kelli, you see like some alternative structures, or what have you been seeing?
I do, and I think I'm not disagreeing with the VC model. I'm just going to slightly push back and expand upon it a bit. I think that the way that space is expanding is we need to look at different types of financial models and investors. So I mentioned in the beginning that you have the government as a funder and private and capital as a funder. But just looking at the private capital side, and this is for sure a hill I'm going to die on, is that we need to start getting different types of financiers from institutional banks, sovereign wealth funds, family offices that can take on different risk thresholds and profiles for the different types of companies that are expanding in space. Because one of the things that I'm seeing about closing business models, and this is a model that could also happen for Arizona, is there's this concept that a lot of us have been talking about the missing middle. And what that refers to is a lot of these companies that have done really interesting technological demonstrations in low Earth orbit, but cannot go to scale yet. So they need to close their business model. These are companies like Astroscale. I don't know if any of you have heard of Astroscale. They're global. They're still considered a startup because they have done really interesting rendezvous and proximity demonstrations in low Earth orbit to look at space debris, but they're going to require a ton of capital to be able to scale, to close the business model, to then get the commercial customers, and to then expand. Who's going to give them that money? It's not a venture capitalist. It's going to have to be these larger banks that can take on that kind of financial debt, have a longer runway to ROI, and understand the ability that closing that business case is going to open up other industries to also access space. Because part of the economic equation is reusable rockets. Completely agree. When we actually can launch a rocket every 1 to 3 days, right? Or we can launch a rocket like getting on an airplane. That is going to open up access and engagement in space like we've never seen before. But we also need the infrastructure in space. So a lot of the ISAM portfolio, which probably a lot of you have heard, but in space service assembly and manufacturing, there are so many companies that are doing really interesting things to refuel in space, to manufacture in space, to launch from space, but they need to close their business cases to then open up the other industries that are going to flourish. And that's a question mark that is being evolved because it's not just VC and angel and it's not just government funding. One of the interesting pieces that I think needs to be discussed more, and particularly when you're talking about financial models, is just this like metamorphosis of the industry over the past 60 years. When we first engaged in space, we confronted this unknown with optimism and enthusiasm because it had never been done before. But space really isn't the gamble that it once was. And it's kind of amazing that in 60 years, we're no longer just asking questions about technological viability and feasibility, but we're now asking questions about financial models, scalability, and business cases. And that's amazing in 60 years. And so getting the people to the table that understand that and understand what the commercialization arc means for not only new starts, but these anchored companies that are pivoting into space, that's what's really going to move the needle.
Well, I've kind of always, I think you heard me say it in my opening statement, I've actually started relating from the finance structure to mining industry. And the reason why is there's a lot of similarities in that the transaction is pretty risky usually. Can't really see what you're going to get until you get it. And then additionally, there's a lot of fails as well. And so, but it took years and years to develop that financial structure around those concepts. And so I think you're hitting right on a good point, which is we're going to have to create a whole financial metric around space and what's required to make a space company successful. So I think that's very wise and very well said. Also, I think we probably need to break down space into different industries and sectors. I think space gets thrown out as everything. And so I think breaking that down will probably help as well. kind of in a wrap up, we have several people here that are raising money for their companies. What's your number one piece of advice you would tell those people that are in this room right now today in their investment search that they're going through right now? What would you say, Mike?
Okay. Other than be very, 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 very careful if you do decide to go down the venture capital road, don't give up control if you can possibly avoid it. I would say explore those alternative options for finance. And so this is, both for the companies, but also, hey, Arizona Space Commission, this is a thing to work on at the state level, try to figure out if there's a way to formalize this, or even just get someone to provide resources and guidance for these startups on how to find those other types of finance and how to negotiate with them, once you find them. Give you one example for a company that I'm working with right now. They have a government contract, so there's a steady income stream that they expect from that. It's one that probably won't get canceled, we hope. But they needed cash up front in order to set up their facility to deliver on the contract and then also buy some of the equipment. So instead of taking investment directly into the company itself, we set up another part of the corporate infrastructure that is essentially a real estate and equipment holding. So we got an investor to put money into that. That means they have the real estate. So if something does happen to it, the investor still has real estate, right? And so they are leasing that to the space startup. So there's the steady income stream from the government. Some of that goes to the real estate holder. And they also just bought an electron microscope recently, which the company is now also leasing. So you look at the question of where is the wealth in Arizona? Where are the resources? If it's not VC, okay, great. Where is it? Is it in real estate? Everybody tells me, Arizona, we're big on real estate. So can you do that kind of deal with investors here so that there's something that de-risks it a bit for them, that they're not just saying, I don't know, that's a space investment, I'm not comfortable with that. Now you're telling me it's mostly a real estate investment with a slight space component and potentially a really big upside if this company succeeds. Well, now that sounds a little more interesting. We can maybe do a deal. So I would look for that kind of opportunity.
Kelli, what would you say?
I would say for me it's two things. The first is getting very clear on your tech development timeline and ROI back to the investor. So I think it's a good thing that the days are gone of just PowerPoint hype companies. I mean, the whole SPAC boom and bust in 2021 did the space industry absolutely no favors, because space became cool in 2020, with the first Inspiration launch, and then everyone realized, I want to become part of it. To Micah's point, they were just PowerPoint companies, and only one really panned out. And so investment hit a high. It then very much dipped. And then what we started to see in the investment community was a a trend toward established things like hardware and infrastructure and a really quick timeline of 1 to 3 year ROI, which is really difficult in space. We're starting to recover. So in 2023, I think there was $12.5 billion of private capital invested. Last year, it was $26 billion, so doubled. It's great. But you have to get very clear on what you're doing, because you can't really just say I'm a CEO of a rocket company. Here's my PowerPoint. And so you don't necessarily need to worry, or I don't want to think that you have to build something and put it into space within 1 to 3 years, but you have to have a very clear roadmap about how you're going to do it and what your plan B, C, D is. So at least they're along with the journey to understand if you're succeeding or failing and how you're going to pivot. That's really critical. And then the other piece too is just the two-pronged approach of how you're going to utilize and give return to investors, but also engage the government. I have been on so many calls with small companies, with investors, and the number one question they get asked is, who in the government is interested in your work? As a nod, as a future customer, as a potential RFI or a BAA or something down the road, but being able to understand how to engage both of those stakeholder communities in a thoughtful way is really going to help them scale.
Awesome. Well, thank you both for your time today. I think we're wrapping up at 2:30, so good job, well done, and we're all available to chat when we're not up on the stage. So,
I think.
oh, we have 10 more minutes. Okay, well then let's.
So-
I thought I saw 2:30 for some reason somewhere, so I apologize.
Sorry,
Well,
can I actually just add
Yes.
one more piece of advice for startups? It's to do with timelines again. So people get really excited about the big ambitious goals for settlement of space and whatever else you're going to do. If you have one of those long-term goals, find a way to make money in the meantime. It's much easier to stay afloat as a company. And I think, as you were saying, the PowerPoint companies are having a harder time. Well, no, too many of them are still getting funded, but it's harder. And so if you can show, we have this technology to go do something on the moon, what can we also do on Earth? Where, by the way, all the money in the solar system still is. It's on Earth. This is where all your customers are. We can talk about future markets. There will someday be people who live in space. I truly believe that. And I am an optimist, despite what I sound like. We're going to get there. But for now, you're not going to get there if you go out of business. So how do you stay in business? Is there something that you can sell on Earth that has value, that is investable? And more to the point, if you're doing this in Arizona, what does Arizona need? What can you do for the community around you that will then sustain you through however many decades it takes before you're putting that thing on Mars or Jupiter or wherever you're sending it? So I really encourage taking that approach. Just to give you another example of something I saw recently, it was someone coming from the water management sector, right? Just not a space person at all. And he says, I know there's this problem. When there's an industrial spill or a natural event, maybe it's flooding, something like that, that works its way through the waterways. You can actually detect that from space. Now, as a water manager, I would have loved to have a service tell me when I needed to start dumping chemicals in the water ahead of time to mitigate whatever was coming downstream towards me. But nobody provides that service. So I want to raise some capital for my space startup it's just going to focus on this. That is very focused. That is very credible. That is something where he can say, this is the market. I have been the market. I know the demand is there. I can show you the demand. Seems like a reasonable investment. So what outreach are we doing in Arizona to find people in other sectors who can use space, and we can build the space companies around that? Because if Arizona has needs, other people have needs too, and you can export it.
Well, and you brought up timeline. I always say, a lot of companies fail on timeline because where investors lose their confidence, of course, is if you're going to say you're going to do something and you're going to do it at a certain time and you don't do that, the next investors aren't going to be there because you didn't do it the last time. And so I think breaking down the company in parts to be able to do that. So I think we heard earlier, Elon built Tesla to fund SpaceX and SpaceX, to fund what he really wants, which is to go to Mars. I think that's kind of leaning on that advice right there, as how to kind of break that down into steps that are achievable as we move through that. I know AZ1, I'm actually part of a CPC, actually, in Canada, which I found CPCs in Canada. If you haven't heard of them, they're a collective pool company. I think it's a wonderful structure for startup, and I saw it as a great alternative for venture capital. And keeps control of the company. So as an entrepreneur, I also like to keep control of the company from time to time. So anyway, what other mechanisms have you seen out there? I know we talked about SPACs. They're not getting done anymore. So do you know of any structures that are getting done that, for the most part, I guess it's private-public cooperation, right, at this point?
Yeah. Yes, I think that's... You're talking about business models, not funding mechanisms. So I think that one of the things that's having its moment is space as a service, right? And a lot of that is being modeled around the commercial space stations that are being commissioned by NASA that are meant to replace the International Space Station in the coming decades. the whole point around that is really to move the commercialization arc around the government being the main customer to the government being one of many customers. So part of the reason why NASA did that with these commercial space stations is they could move their research and manufacturing and all the good stuff they do on the ISS to a commercial model, but to be one of many. We are starting to see that arc more, space as a service in terms of satellite operators where the government is one of many customers. That business model tends to be a bit more understood because it's the same SaaS model we have as software as a service. It's just slightly different because it's different infrastructure, a different domain. But to your point, I think that the broader question is when that model is slightly going to shift to where it can be commercial alone. And I don't think we're going to see that for a while. Just because the appetite, the infrastructure, and the business cases are not closed yet, but that public-private partnership of space as a service is sort of this crutch I'm seeing as we tend toward more commercialization and opening up new markets.
Yeah, just to add to that, I know that's the plan. That's the plan for the industry, certainly. The part that I have difficulty with as someone who looks at the finances is where is the innate source of value in space? So you can have all of these companies that are saying, well, we're not part of the gold rush, we're selling the shovels, we're selling the infrastructure as a service. Yeah, that heard that I don't know how many times. But someone still has to go and find a source of value in space, whether it's in Earth orbit or beyond, on the surface of the moon or Mars. They have to create that value that they can then sell to someone who has money in order to pay all of these service providers, ultimately, someone other than the government. And I haven't seen anything convincing on what that is yet. So we can talk about, asteroids have lots of minerals, we can harvest all of that, bring it back, things like that, but it's still not compelling enough for me yet.
So I think the most immediate near-term example is the utilization of zero gravity for manufacturing, for biomedical research. So Space Foundation was fortunate to partner with ASU and the other universities on the Space Edge Accelerator. And really, that is the next domain, not just for the biomedical pharmaceutical industry, but for many things. I mean, that domain has already been utilized to manufacture an artificial retina. They're growing organs on chips, right? Because of the radiation and the lack of gravity allows us to utilize that in a very interesting way. I don't think it's that illogical of a leap to also think about that environment to shore up our supply chain issues. So instead of sending things overseas, why can't we just send things 12,000 feet up and be able to manufacture them? And so I think that domain is really the one that's going to give a lot of near-term return once these space stations are up. I understand that's a caveat, but the utilization of those areas is just going to open up a lot more opportunity for non-space industries and a lot of economic return, in my opinion.
Yeah.
Well, and I think that's what you're saying is we got to get the infrastructure in. You almost have to get the infrastructure in so that you can find out what you have up there and what you can put to use.
Yeah, and that makes sense to me, when you're talking basically Earth orbit. But anything deeper space than that, I think it's still a really hard case to make. And it's more a matter of faith rather than a business case. And some people will invest on that basis, but most will not.
Yeah, that's a tough environment. We are actually kind of out of time. So thank you very much for your time. I appreciate it. Maybe a quick wrap up. Is there anybody that had a question that they wanted to ask real quick of the panel before we kind of call it quits? Yeah, go ahead.
Hey, I want to ask a question around risk and your perspective on it. And Kelli and I have talked about this a little bit even today, but you talk about the middle market from a financing perspective, and when you get institutional financing into play, you can reduce risk for the larger companies that don't have as much of a risk appetite. But when you talk about how do you reduce risk for those institutional investors to come in, and the second part of that question relating to Arizona is how can Arizona and its Space Commission and the state, is there any way that they can reduce risk to foster investment and that middle money to start coming in at a state level to foster relationships and growth here in the state. Full stop.
Yeah, so, and I liked our conversation earlier. I think the conversation around risk is, different people have different risk thresholds, and I almost think that there needs to be some sort of rubric. So I actually created a rubric. I'll just throw out my way of approaching it. So last year at the International Astronautical Congress, I wrote a paper essentially looking at capital market hype and risk, and how you look at the different thresholds of the private sector community, the government community, and how you account for it. I created a rubric with different questions to assess the person's personal risk on a scale from 1 to 10, and created an equation. So at the end, they got a number between 1 and 50, which showed them where on the scale they were with this idea of an investment. Because it is difficult to quantify, because are you looking at risk in terms of, is it technical risk? Is it human life risk? Is it financial risk? Is it business case risk? And it means different things to different people. So having some sort of framework that allows for those subjective inputs and gives you something objective on the outside is really kind of one of the main ways to start, because otherwise I think when you insert that word, you end up having two different conversations from both sides of the table. So there just needs to be some sort of level setting idea of how to look at it.
Just very quickly, some risk you can reduce, some risk you can mitigate, and some risk you need to figure out how to share between the different parties who are involved. And that last part is where I think a lot of people fall short, is figuring out how to share it.
I would also, I would piggyback on that and say also look at who your audience is based upon that risk. Because I think there's a lot of, all space is the same investment. And that's definitely not true. So, maybe this is more of an R&D deal. Maybe this is more of a, high risk or whatever, or exploration deal. Those are different people you talk to, and it seems like we all go to the same people. But if you can figure out, who is investing in these sort of things in other areas, then those are the people you want to talk to as far as risk profile. Anyway, thank you very much.